So I was reading an article the other day about the Federal Housing Administration green-lighting a 40-year fixed mortgage. And I have a lot to say about that. But before I share my thoughts, I actually wanted to just show you the numbers to see what that would actually mean for you and your families. So the first thing we're going to look at is a mortgage calculator. My favorite mortgage calculator to use is the mortgagecalculator.org. And I like it because you can put in all the basic stuff: home value, down payment, loan amount, interest rate, and total years. But you can also put your property tax, property mortgage insurance, which is a fee that you pay if you do not put a 20% payment down, homeowners insurance, HOA. So it really can include everything you want to look at when you're trying to figure out how much your mortgage payment is going to cost. So the example we're going to use today is a $400,000 home with 20% down, which gives us a loan amount of $320,000. And we're going to be looking at our monthly payment, our total interest paid, and our total payments for a 15, 30, and 40-year fixed mortgage. Now, the first thing I want to point out is that typically when you get a 15-year fixed, not only are you going to pay it off sooner, but your interest rate is actually lower. So for today's interest rates, we currently have about a 5.97 annual percentage rate for a 15-year fixed. That goes up to 6.54 for a 30. Now, we don't know what the interest rates are going to be for a 40-year fixed. I would assume they're going to be slightly higher than a 30, but because we don't know, I'm just going to use the same interest rate for a 40-year fixed. All right, so we have our interest rates input. Now we're going to take a look at the monthly payments. So for a 15-year fix, we're going to have a monthly payment of $2,978. It is about $650 less for a 30-year fixed, and then that goes down another $150 for a 40-year fixed. And I know a lot of people are trying to get their monthly payments down as low as possible because interest rates have been so high, which I can completely relate to. We're going to be buying a home in the next couple years, and I've been looking at the interest rates constantly trying to see what our mortgage might end up being. But the reality is, when you have a longer term mortgage, you're going to pay significantly more in interest. And I just want to make sure everybody is aware of that, and I want to show you what that actually looks like. So for a 15-year fixed mortgage, you're looking at paying $165,000 in interest for the length of the loan. That goes up to $411,000 for a 30-year fixed. So what is that? $240,000 more, and then that goes up to $583,000 in interest. So this isn't including payments towards the actual home itself, it's only interest payments. So now let's take a look at your total payments all in from beginning to end. You're looking at $536,000 for a 15-year fix. Then for a 30-year fix, we're looking at $833,000. So you're paying more than what you paid for the home in interest. And then finally, for a 40-year fixed, you're looking at over $1 million all in for a $400,000 home. So with all that said, I feel strongly that a 15-year fixed mortgage is definitely the way to go, and I would stay away from the 40-year fixed mortgage. Again, the interest rates might end up being even higher than what a 30-year fixed mortgage is, so I would definitely stay away from those. However, at the end of the day, it's not a matter of deciding you want a shorter length mortgage. You actually need to qualify for it. So using the 28% rule, which is when your mortgage payment does not exceed 28% of your monthly gross income. Let's take a look at what that actually looks like. So for a 15-year fixed mortgage, you would need an annual gross income of $127,000. That goes down to $99,000 for a 30-year and $92,000 for a 40-year. So while the 40-year fixed mortgage is only $150 $150 a month more in terms of your payment, or $150 less in terms of your payment, you'd actually need to increase your income by over $500 to be able to keep your mortgage payment within 28% of your income. But ultimately, I think that's a small price to pay to be saving ultimately hundreds of thousands of dollars. If you can't get qualified for a 15-year fixed, what I would recommend is figuring out the monthly payment you would need to make in order to still pay it off in 15 years. It's going to end up being a little bit more if you have a 30-year fixed and you're just paying additional payments, because that interest rate is going to be higher. But it is another great way, if you can't get approved for the 15-year fixed, to decrease the amount of interest you're paying over the life of the loan. So I hope you got some value out of this video. If you have any questions, please let me know in the comments below, and have a great day. Bye.